This is Nightly Business Report with Sue Herrera and Bill Griffin.
Data debacle. Facebook's crisis is intensifying, and the pressure is coming from Wall Street, Main Street, and Washington.
Rising risks, what economists see as the biggest threat to the economy as Fed policymakers begin their meeting on interest rates.
Confused cars. What happens when self-driving vehicles need a human touch? One Silicon Valley startup says it has the answer. Those stories and more tonight on Nightly Business Report for this Tuesday, March the 20th.
Good evening, everybody, and welcome. Stocks bounced back. Investors focused on fundamentals as the Federal Reserve started its two-day policy meeting, with most expecting the central bank to increase interest rates. We'll have more on that in just a minute. Higher oil prices lifted the energy sector, which helped offset a decline in social media stocks. By the end of the trading day, the Dow Jones Industrial Average rose 116 points to 24,727. The Nasdaq climbed 20, and the S&P 500 added 4.
And it was a continued slump in Facebook shares that curbed some of the market's gains today. The social media company is facing, as you know, a barrage of criticism over how it handles and protects user data. One analyst said today that the level of uncertainty surrounding that stock is like never before. And that also sent shares lower again. Julia Boorstin has the latest on Facebook's privacy scandal.
Regulators, consumers, employees, and investors looking for answers from Facebook in the wake of the scandal over the harvesting and sale of data of 50 million Facebook users to UK-based Cambridge Analytica. Facebook issuing a new statement, quote, Mark, Cheryl, and their teams are working around the clock to get all the facts and take the appropriate action moving forward because they understand the seriousness of this issue. The entire company is outraged. We were deceived. We are committed to vigorously enforcing our policies to protect people's information and will take whatever steps are required to see that this happens.
We're in the midst of the textbook case study and how not to handle a crisis. Rule number one, top guy or gal have to address the issue. It appears that Mark Zuckerberg and Sheryl Sandberg have retreated to the caves of Kandahar here. Where the heck are they?
Facebook shares continuing their decline today on, among other things, the FTC saying it takes these allegations of data misuse seriously, saying, quote, consumers need stronger protections for the digital age, such as comprehensive data security and privacy laws, transparency and accountability for data brokers, and rights to and control over their data.
The business model of Facebook really does depend on harvesting user data for selling to advertisers. So if you have to really cut back on that because of this investigation, I think it will deeply hurt the revenue model Facebook has come to depend on.
Meanwhile, Cambridge Analytica taking action, suspending its CEO Alexander Nix with immediate effect, pending a full independent investigation, saying his comments secretly recorded by Channel 4, in which he describes shady business practices, do not represent the values or operations of the firm. For Nightly Business Report, I'm Julia Boorstin in Los Angeles.
But it wasn't just Facebook that felt the heat. Other social media stocks like Twitter, Snapchat, and the social media ETF also fell. And when an entire sector is under pressure, especially one that has played a role in the market's run-up, investors take notice. Bob Pisani is at the New York Stock Exchange for us tonight.
Facebook is a big issue for the markets in general for several reasons. First, technology was the big market leader last year and into 2018. And it was partly because social media stocks were big market movers. And not just Facebook, but Snap and Pandora, Twitter, Groupon, other social media stocks attracted a lot of new money last year. The social media ETF, SOCL, it was up over 50% in 2017 and attracted a lot of new money. But now social media in general is under attack, and it's not clear if there will be any market leader. There's a big problem with that. No market leadership in social media. The other problem is risks of increased regulation. Internet platforms in general have been very lightly regulated since the first laws were written in the 1990s. But with calls for investigations in Congress gaining steam, all we need are one or two more nasty revelations. And there will be bills introduced with broad implications for many other tech and software stocks. Finally, if you're hopeful that Facebook's shareholders will rise up and force changes in the way Facebook manages itself or even force changes in management, forget about it. That's not going to happen. founder Mark Zuckerberg has assured that that won't happen. That's because Mr. Zuckerberg owns the majority of the voting rights to the company. Facebook's Class B shares, controlled by Mark Zuckerberg and a small group of insiders, has about 18% of the shares. Zuckerberg himself controls about 14%, but their Class B shares have 10 votes per share. The Class A shares that trade have only 1 vote per share. The net effect is that Zuckerberg and a small group of insiders control almost 70% of the voting shares in Facebook. Good luck forcing changes with those kinds of voting rights. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And so, as both Bob and Julia mentioned, there is now this increased risk that the whole social media industry will face tighter regulation. Not exactly something that businesses usually want, but it is something that a number of people in Washington are calling for. Kayla Tausche picks up the story for us from there.
Facebook is heading to Capitol Hill this week. Today and tomorrow, company staff will brief staff of 6 congressional committees: House and Senate Intelligence Committees, the House and Senate Judiciary Committees, the House Committee on Energy and Commerce, and the Senate Commerce Committee. The company's general counsel testified in November on foreign actors using social media to influence the 2016 election. At the time, lawmakers said the company was making progress in scrubbing its platform, but now say stronger regulation will be needed if the problems persist.
The industry won't solve these kinds of problems themselves. We'll have to solve them with legislation. And I don't think that's the most desirable course of action. But you can't have 50 million people lose the privacy of their data this way.
So far, potential legislation has simply targeted disclosure. In the U.S., a Senate proposal called for social media companies to label and report political ads bought on their sites and who's behind them. The European Commission will release a regulatory action plan next month. One study it commissioned suggested clearer labeling for paid content. But the Cambridge Analytica breach deals with the unwitting leveraging of users' own data and privacy to sell them a political candidate. While lawmakers on both sides of the Atlantic wouldn't rule out regulating this aspect of social media, they want to investigate Cambridge Analytica first. For Nightly Business Report, I'm Kayla Tausche in Washington.
And indeed, at the center of the Facebook controversy is a company that few had heard of until now. Cambridge Analytica is a data analytics firm, and today its CEO was suspended. Michelle Caruso Cabrera has more on the company that's now facing a crisis of its own.
Cambridge Analytica is a UK-based political consulting firm, and it credits itself with helping Donald Trump win the election. Facebook accuses them of violating its rules for harvesting user data. Hedge fund manager and top Republican donor Robert Mercer is a major investor, and Steve Bannon, who worked in the Trump White House, is reportedly on the board. Today, Cambridge Analytica is in the news again after Channel 4 of the United Kingdom unveiled several pieces of video last night which show the CEO, Alexander Nix, speaking with a man he thinks is a potential client.
We'll have a wealthy developer come in, somebody posing as a wealthy developer. I'm a master of disguise. Yes. They will offer a large amount of money to the candidate to finance his campaign in exchange for land, for instance. We'll have the whole thing recorded on cameras, blank out the face of our guy, and we'll have posts on the internet.
So it'll on the Facebook or YouTube or something like this, it can be done.
We'll send some girls around to the candidate's house. We have lots of history of things.
Cambridge Analytica prides itself on creating very detailed psychological profiles of individuals on social media and making extremely targeted ads. But the methods described in the video, use of women, bribes on tape, have very little to do with anything digital. In a statement, Cambridge Analytica explained that conversation this way. Assessing the legality and reputational risks associated with new projects is critical for us, and we routinely undertake conversations with prospective clients to try to tease out any unethical or illegal intentions. The 2 Cambridge Analytica executives at the meeting humored these questions and actively encouraged the prospective client to disclose his intentions. They left with grave concerns and did not meet with him again. For Nightly Business Report, I'm Michelle Caruso Cabrera.
Well, there was other news today. As we mentioned, Fed officials are meeting for the first time under their new chairman, Jerome Powell. The 2-day gathering started today. It ends with a decision on interest rates tomorrow. Ahead of that decision, Steve Liesman surveyed top economists and money managers about the economy and the stock market.
Look out for higher interest rates and lower stock prices this year. Respondents to the CNBC Fed survey have upped their outlook for the yield on the 10-year Treasury to 3.17% by year-end and 3.5% for 2019. And they've edged down their outlook for stocks for the first time since July. 100% of the 40 respondents, who include economists, fund managers, and strategists, expect the Federal Reserve to hike rates at the conclusion of its March meeting tomorrow. That's en route to hiking 3 times this year and twice next year. But the risks are towards more rate hikes. The second choice of the group for both years was one additional rate rise. But higher interest rates are not seen as the biggest threat to the economy. It's trade. 63% of respondents say President Trump's trade policies are negative for U.S. growth. Just 3%, which is one respondent, says this will help. 23% say too soon to tell. Meanwhile, 81% say leaving the North American Free Trade Agreement, or NAFTA, is negative for growth. 75% are concerned about a trade war, and 48%, a plurality, say the president's steel and aluminum tariffs will cost more jobs than they will add. That's strong criticism from a group where 58% say they support the president's handling of the economy. The concern about trade is so great that it tops the list of biggest threats to the U.S. expansion, far outpacing worries about inflation, terrorism, and even the Federal Reserve itself. For Nightly Business Report, I'm Steve Leisman.
By the way, there are signs that banks are starting to lift deposit rates for savers. As you well know, banks have largely kept their deposit rates the same for years, despite incremental increases in the Fed funds rate. According to Bankrate.com, though, the average rate on a one-year CD rose, you ready, to 0.49% last week. And now, while that is still historically low, it is the highest level in more than 7 years.
Wow. Time to take a look at some of today's upgrades and downgrades. Bank of America is one of a number of banks that are well positioned for those higher interest rates. That's according to Raymond James. The firm cites Bank of America's low-cost deposit and non-interest-bearing deposit bases. Higher rates will add to earnings per share this year and next. The stock today was unchanged at $31.98. Goldman Sachs says Amazon shares could easily hit $1,900 this year. The analyst calls the stock undervalued. He says current estimates are too low for the company's cloud and retail businesses. The shares rose more than 2.5% to $1,586.51. Its market cap is now larger than Alphabet's, making it the second most valuable publicly traded company.
Elsewhere, Oppenheimer has raised its rating on Roku to perform from underperform. The firm says that the stock is no longer a compelling short trade at its current valuation. The analyst cited a number of potential catalysts for the stock, including the launch of the Roku channel. That stock rose more than 2% today to $34.73. And Signet Jewelers saw its price target cut to $40 from $52 by J.P. Morgan. The firm says that the jeweler's transition is going to take time and that store closures will weigh on future revenue. The analyst also cited a lack of product innovation, and he maintained his neutral rating on the stock. Signet Jewelers fell 3% today to $38.27.
Still ahead, with the clock ticking, are lawmakers any closer to reaching a spending deal by Friday's deadline? The board of the California Public Employees Retirement System voted against a proposal to divest its investments in assault rifle retailers and wholesalers. The board said such a move would do little to reduce gun violence. CalPERS has more than $350 billion in assets, making it the largest public pension fund in the U.S.
Congress is in a race against time to pass a $1.3 trillion spending bill ahead of Friday's deadline or face another government shutdown. House Speaker Paul Ryan said today that lawmakers do continue to talk and they work their way through various unresolved budget issues. Ylan Mui is back with us again tonight. And you also have a snowstorm to deal with tomorrow, so they really have to work hard. When do you think we'll finally see a bill of some kind?
Well, Republican leadership keeps saying that it will be today before midnight, but we have heard this story before, just as recently as yesterday. The House is trying to vote on this bill on Thursday in order to give the Senate time to pass it before that Friday deadline. But we are already hearing from rank and file lawmakers that this timeline could slip. Maybe the spending bill doesn't come out tonight, and maybe we even enter a temporary government shutdown or even might need another stopgap spending measure to give lawmakers more time to hammer out all of these details.
I know there are a lot of different issues that are out there, but what is the primary hang-up here?
There are really two big issues that have been stumbling blocks. One is funding for the Gateway Project, which funds a tunnel that goes from New Jersey to New York. The president has said that he is opposed to that project, but it is very important to key lawmakers on both sides of the aisle. The other issue is border wall funding. That is something that the White House wants, that Democrats have been opposed to, especially without a solution for the undocumented immigrants who were brought here as children.
So what do you think? Government shutdown or short-term bill to kick the can down a little further on the road?
You know, every hour that passes without a deal means that the risk of a shutdown is actually rising. And we're reaching the point now where any one senator who decides to hold up this process will mean that Congress will fail to reach that Friday deadline, and then all bets are off.
Maybe we'll see you tomorrow night.
Hopefully not saying the same thing.
Exactly. Yolande Mui in Washington, thank you.
Well, FedEx raises its full-year outlook, and that is where we begin tonight's Market Focus. After the bell, the delivery giant said stronger operating performance and tax changes prompted it to raise its guidance for fiscal 2018. The company also reported quarterly results that topped expectations and said it was making investments in 2 of its shipping hubs. Shares initially rose in after hours and finished the regular day up nearly 1% to $251.99. The cloud computing company Salesforce said it has agreed to buy software maker MuleSoft for $6.5 billion. Salesforce said the merger will help users access data across various cloud platforms. Salesforce shares finished up a tick to $125.12. Meanwhile, shares of MuleSoft took off. They rose 27% to $42 even. And the children's clothing retailer The Children's Place topped profit expectations and raised its quarterly dividend to 50 cents a share. Same-store sales and total revenue also grew, but both were softer than expected. The shares fell nearly 8% to $127.95.
Defense contractor General Dynamics has sweetened its offer to buy CSRA, all in an attempt to ward off a stronger bid from rival CACI International or CACI International. General Dynamics' new offer sits just under $7 billion, and by the way, it is still lower than CACI's bid. Shares of General Dynamics, CSR, and CACI were all higher on the day. Investors had their first chance to react today to Arena Pharmaceuticals' upbeat drug study results that were released after the bell last night. And boy, did they react. The drug maker said that its experimental treatment for ulcerative colitis performed significantly better than the placebo, with fewer patients experiencing side effects. Company plans now to move forward with additional tests. In the meantime, shares jumped more than 28% today to $39.75.
Well, IBM has been a staple in many portfolios for decades. You could call it one of the original disruptors, but more recently, it has struggled to keep up and turn itself around. Its shares have lost more than a quarter of their value over the past 5 years. But at a conference in Las Vegas, IBM sees its future powered by new technologies. Deirdre Bosa has more.
At IBM's annual Think Conference, the company's biggest customers and partners are here in Las Vegas to hear about Big Blue's future strategy. We were able to sit down with IBM CEO Ginny Rometty to hear about her turnaround plans to shift the company towards next generation technologies like blockchain and artificial intelligence as its legacy business slows.
It's a different company than 10 years ago, 5 years ago, 3 years ago. And so break out the pieces. For one, the new products and services. And we did return to growth starting in the fourth quarter, as you saw there. And the point being, 46% of what we make today, our products and services, are growing at 11% and are new to the IBM company. And a strong pipeline behind it. Blockchain, quantum, strong pipeline built.
In light of recent pressures on Facebook in terms of privacy and security, data responsibility was a big topic here at Think. Box CEO and founder Aaron Levie talked about the need for updated regulations as tech and innovation plays a bigger role in consumers' lives.
We've had a tremendous amount of technology innovation that is now starting to really impact every single element of our lives. And this is what we've seen from the digital revolution. It's changing our cars and transportation. It's changing life sciences and healthcare. It's changing voting and the democracy. And for quite some time, we've treated these technology platforms as sort of utilities that all of the users are the ones liable on these platforms. But ultimately, as you see growing use cases for machine learning and AI, the platforms themselves are going to be making more decisions on behalf of us, which means we have to make sure that the decisions that these platforms are making are those that protect consumers, that keep us safe, that keep our information private, keep us secure.
David Mackay, CEO of RBC, joined Ginny Rometty on stage for the conference keynote. As chief of Canada's largest bank, he's here to discuss the importance of new technologies into his business. And he also knows a thing or two about winning consumers' trust and the importance of privacy.
There is a lot of brand risk, absolutely. I think you're seeing markets react to that uncertainty in the last couple of days. But certainly if you want to create value for a customer and manage that data, and if you breach that trust, others will take that place and do that on behalf of the customer in a better way. And I think it does create franchise risk over the short and long term.
From tech companies to banks and more, IBM's Think Conference this year looked at a future where data and privacy take center stage. For Nightly Business Report, I'm Deirdre Boza, Las Vegas.
Coming up, a different kind of remote control car.
What happens if you're in a self-driving car and it gets confused and isn't sure what to do? Well, somebody who is a remote operator takes control of the wheel, literally. I'm Phil LeBeau. We'll explain when Nightly Business Report returns.
As expected, the Weinstein Company has filed for bankruptcy. The movie studio was crippled, as you know, by the sexual harassment and assault allegations made against co-founder Harvey Weinstein. Private equity firm Lantern Capital Partners may acquire that company now through the bankruptcy process.
Expedia's Orbitz subsidiary discovered a possible data breach affecting more than 800,000 customers. The travel booking site said the hacker may have accessed the data late last year on one of its older platforms. The company is working to notify those who may have been impacted.
United Airlines is temporarily suspending its transport of animals in the cargo compartments of its planes. This after the carrier inadvertently flew pets to wrong destinations last week. Remember that? In the meantime, the airline is conducting a review of its pet shipment operations. And by the way, this suspension does not impact customers bringing pets on board in the cabin.
As we reported yesterday, the fatal accident involving one of Uber's self-driving cars remains under investigation. Today, Toyota said it will temporarily halt its autonomous vehicle testing. The program was being tested in California and Michigan. The decision will not affect its driverless operations in Japan.
Clearly, the still young autonomous vehicle industry is working to overcome a number of obstacles. One in particular is what to do when a self-driving car stops or slows down because it's confused about where to go. Well, a startup in Silicon Valley thinks it has the answer to that problem. Phil LeBeau takes us for a ride in Mountain View, California tonight.
Phantom Auto's test car may look like any other driverless vehicle, but it's not. It's being operated remotely by Ben Schuckman.
Welcome, Phil. My name is Ben, and I will be your Phantom remote operator for this drive.
Right now we're at a four-way stop. Ben can see all the cars and the traffic around here, and he's making the turn. As someone who has gone for a number of rides in autonomous drive vehicles, riding in a remote operated vehicle doesn't feel a whole lot different.
We can take control. It will take us about 15 to 20 seconds. We're a solution for when the vehicle is moving at a very slow speed or has already come to a stop or the vehicle is paralyzed and doesn't know what to do.
While Waymo, GM, and others have encountered relatively few issues while logging millions of miles testing their self-driving vehicles, they also admit autonomous drive cars constantly face tricky situations, a hurdle that will slow down how quickly we see large numbers of them out on the street.
We know that the last stretch here
gets really hard. The kinds of things that are going to stand in the way are really busy cities like New York, where you just have lots of pedestrians, bicyclists. There's so much going on.
Humans are always needed, even with machines that works great. You always need a support channel. With an autonomous vehicle, you need that channel to be fast. You need someone to be there in real time.
Phantom Auto envisions a future with call centers around the world where remote operators can step in and take the wheel when self-driving vehicles need a human touch. Phil LeBeau, Nightly Business Report, Mountain View, California.
Some sad news to tell you about tonight. Pete Peterson, who made his name on both Wall Street and in Washington, has died at the age of 91. The son of Greek immigrants, he went on to become the co-founder of the private equity firm Blackstone. He was chairman of the Council on Foreign Relations for 22 years, Commerce Secretary under President Nixon, and vice chairman of Lehman Brothers. He gave the bulk of his fortune to a foundation that focuses on the dangers of swelling government debt.
Part of the fabled Four Seasons restaurant lunch crowd. Great guy. Before we go, another look at the bounce back on Wall Street today. The Dow rose 116 today to 24,727. NASDAQ climbed by 20. The S&P added 4.
And that will do it for us tonight. I'm Sue Herrera. Thanks so much for joining us.
I'm Bill Griffith. Be safe out there with all the bad weather, everybody. We'll see you tomorrow.